going to quickly give you a complete guideline on why you can realistically make it as a day trader. I'm 24 years old. I've been trading gold for the last 4 years. I've been profitable for the last 2.5 years. I use trading as my means of making money, my means of paying rent. It's my lifestyle, and I'm going to show you why you can realistically be doing the same. So if you're new to trading, there's either going to be 2 reasons why you want to do it. It's either you want to spread money that you're making from your work, or it's because you have no money. If you have no money, the first realistic thing you need to actually understand with trading is you're going to need to find a job. You're going to need to find some savings to actually start trading. You don't need a lot of savings, but you also need something to cushion down on. Because if you're using trading as a means to pay rent, to pay your bills, then it's going to be much harder, much more stressful, much more mentally draining. But if you do have some savings, you do have a little bit of side money and you want to actually start trading, here's a realistic guideline on how you can start. Scratch making a personal account. I know everyone wants to do that. Every new trader thinks, yes, let me just put my personal capital in there, risk a certain amount and try and flip it. That doesn't work. I tried to do that when I first started my journey. I made a lot of money and I lost a lot of money due to FOMC. I didn't know what I was doing. What you want to do now is you want to utilize prop firms. I know there's a lot of prop firms out there that are unreliable, but I'll provide a list of reliable prop firms that I use. I'm a future trader, so I tend to use future prop firms. The first thing that you want to do is actually find a strategy. You want to have a playbook. You want to have a set of systems that you know you can follow, a profitable system that you can follow for the long term. If you don't have a strategy, comment strategy down below and we'll provide you my full playbook that has ensured me profitability for the last 3 years. However, there's plenty various mentors that you can find online. There's free YouTube videos as well. Finding a profitable strategy is very easy. There's plenty online. However, sticking and ensuring profitability over the long term is where it starts getting difficult. Once you find your strategy, the next thing you want to do is start forward testing. I don't back test because I feel like back testing removes some of the real life experiences you'll have in the markets. If you're back testing, you'll kind of know what price is going to do. However, forward testing, you have no idea what price is going to do. You're actually reacting to real life price movements, which I feel is the most effective way to test out your new strategy. So once you're forward testing, what you want to do is journal. You want to journal every single trade you take. You want to journal your emotions, your entry point, etc, etc. If you want a complete guide how to journal, comment journal down below and we'll send you our full journal work spreadsheet. Once you start journaling your trades, you want to journal about 50 to 100 trades. I know this might seem long, but however, this is going to really reflect and be beneficial in the long term because 100 trades is going to show you a nice sample size of what works and what doesn't work. Once you have 100 trades, you want to revise each trade. You want to journal which trade was a good entry, good win, or a good entry, good loss, etc, etc. There's bad entries, bad losses, good entries, bad losses. Do you get what I'm saying? So you want to journal what was good, what was bad, and you want to see the reasons for the good trades and the reasons for the bad trades. Start removing the reasons for the bad trades, whatever they might be. It might be over trading, it might be not waiting for candle closures, and then you want to follow the good trades, the systems that were working, and you want to take that into the next step. Once you know what works, once you have a bit of a system, a bit of a playbook, what you want to start doing is utilizing prop firms. I know a lot of people want to start with their personal capital, loading up money into their personal account and try and flip it. Don't do that. We're living in 2025 where companies will provide you prop firm accounts. It will be demo accounts. It's not real accounts. However, if you can show a skill that you actually are profitable, they'll provide you the profits of a certain percentage of whatever the account you get. Due to me being a future trader, I trade future prop firms such as TopStep. That's my #1 recommendation. However, if you're a Forex trader, I can provide some Forex prop firms down below. Just comment Forex or comment futures and I'll provide you some prop firms down below. Many companies will provide you 50k accounts, which cost as little as £40 to £50, which if you can show that you can trade these accordingly, you can actually start stacking these accounts up. What we like to do in my community, which I tell a lot of my new students to do, is when you're provided a A+ setup, given that you have a profitable system, given that you've done all the journaling, you understand what works, you understand what conditions suit your trades the best. When you're provided an A+ setup, I always tell my new students, if you get a small account that costs as little as £40 to £50, size up on that account. Aim to try and pass that account. You don't want to be stuck on the challenge phase. A lot of old traders used to be stuck on the challenge phase for about 6 months and then they will still end up blowing the account. We don't do that anymore. We're trying to pass these accounts and get a payout as quick as we can. What we do in our community, which I tell a lot of my new traders, when we have conditions going on in our favor, we do a thing called dynamic bet sizing, in which we will increase our risk in conditions that are more suited in our favor. So if we have more conditions in our favor, then we're going to increase the risk trying to pass this account quicker. We don't want to be stuck on the challenge phase, so we'll increase our risk, aim to pass this account in 1 to 2 trades. If the trade goes our way, we pass the account. If the trade doesn't go our way, we've simply lost £40, which is much better than losing potentially however much you would have risked if you had a personal capital account. So simply, more conditions in our favor, increase size; less conditions in our favor, decrease size. And if you do have a profitable system, you shouldn't incur more than 10 losses in a row. And if you do occur 10 losses in a row, then what you want to do is forward test again, look over your journal, and understand that there may be a little slight tweak that you need to make in your playbook. And then once you do that, you want to buy another account. Just repeat the process again, and then soon enough what you'll see is you can be on up to about 350-400k capital if you're copy trading these accounts, and if you have a profitable system that you stick by. Simple.